morning, wherever you are. We are in the Bay Area. I think temperature is 72 degrees. It's gonna be today, and I know you're ready for Vinny and Beau show, just like we come every week.
Another Friday in the books. I wasn't much of a runner, but now I started running at the gym because I'm like a little short guy with a lot of muscle, so it's hard to run.
We are Vinny and Beau show coming live to you from San Francisco, the great Bay Area, right here from Danville, Blackhawk. We always come to you on Friday at 9:30 a.m. 9:30 a.m. Pacific and 12:30 p.m. Over there in the East Coast. All right. We are here. Good morning, everybody. This
Good
is
morning, guys.
Friday, Vinny and Beau show, and Vinny is here in the Bay Area, San Francisco, Danville area. Of course, brother Beau right there in Las Vegas area, and we have excellent, just a great guest from Go Abundance tribe and Saul. And I'll let Beau kind of introduce. Is that okay, Beau?
Sure, yeah. So I met Saul years back through GoBundance Mastermind, and back then he was a high producing real estate broker. He's done 2,000 plus transactions and so forth. And I think 5 or 6 years ago, I helped him buy his first commercial property. He had been doing flips and all that good stuff. Got in the commercial world, and he's been crushing it in the self storage value add commercial space. And a couple episodes ago, Vinny said, Vinny dabbles in a lot of things, but he mostly specializes in multifamily and assisted living. And he said, I want to start developing and buying self-storage. Yeah. And I said, well, we should get Saul on the Vinny and Beau show to talk about self-storage because he knows this business and he's been able to grow a business very rapidly and get a lot of units under management. So I figured there'd be no better guest to give Vinny a little education in the space, and who knows what else will happen. But our show is really about real estate investing, mindset, motivation. And every Friday we do this show at 9:30 a.m. Pacific time. And welcome to the show, Saul Z. And why don't you introduce yourself and kind of give us your background and how you got into real estate and how you progressed into the commercial space.
Please. Yeah, thank you, guys. It just dawned me actually, that you helped me to do the first deal when I bought my first industrial property, and I think it was $250,000 loan on $1 million property. But at that time there was hard money lenders were not, I think, existent for this type of product, or maybe I just did not know at that time. But I just realized actually you were the one who originated loan, and it made me happen. But briefly about me. So I thank you for the introduction. I don't think I have those accolades, but I was a high producing broker. I got in real estate as 2003 as an appraiser. Then I started brokering houses, flipping houses. I built a brokerage. I was a partner in KW office. I sold that one. I sold my brokerage too, and then we're flipping houses. Not 1,000, but definitely in the hundreds. I'm still a partner in residential fix and flip company where I'm a third of an interest, but I'm playing more of a coach right now to two of my two guys who have been with me over 10 years. We building some residential, building triplexes, 3 flats, the 3-unit buildings in Chicagoland area. But my main focus for the last 4+ years right now, it is industrial buildings. And about a year and a half ago, we started buying self-storages. And our mindset, I guess, and strategy stayed from single family and small apartments, fix and flips, where we buy value adds. We're looking for the facilities that are undermanaged, they need work, where we can take, half vacant, full vacant, or with some kind of problems, whether a financial problem or with that property problem, and we put some sort of
Oops.
Uh-oh, uh-oh.
yeah,
Yeah.
we put sweat equity into it, and we increase the value. We bought last year 6 facilities. 2 of them we sold. 4 we kept. This year we have a target to buy 10 facilities, and also we bought last year 4 industrial buildings. One of them was my biggest in my career. That was in Milwaukee, 156,000, no, actually 165,000 square feet, 15 acres, a block in Milwaukee, half vacant, big, massive rehab. Um, and yeah, that's kind of in a nutshell.
Wow, wow, wow. So let me ask you a question. Saul, have you been like doing syndications, like, from family, friends,
Yeah.
bringing the equity in, or do you do it all yourself with the partners?
Yeah, I've done one syndication. We bought 2 school bus terminals. Right when the COVID, March 5th, that's when we closed on 2020. School bus terminal. That was the deal I syndicated when I did a Reg D, and I
Yes.
raised equity. That was $6 million deal, and we did 80% LTV. So we raised equity, I think, from 6 or 7 accredited investors. Um,
Mhm.
but quite frankly, I was not super excited about that model. And
Mhm.
so that deal was already stabilized. That we didn't have to increase the value. There was a national tenant into the with that property, so we had to syndicate. But to answer the question, just only once, and the
Mhm.
rest we are pretty much buying with our own equity. We do a mezz debt, and because our deals are a lot of times are heavy lifts,
Yeah.
and they have a lot. There's a lot of value add.
Sure.
So we are able to cash out equity fairly quickly within 12 to 24 months. Um, and
Makes sense.
so we're bridging out with own cash, or
Yeah.
we have a couple lenders who help us with the mezzanine debt,
Sure.
or sometimes we put, I mean, so to be very clear, actually, most of our deals right now, not most, all of our deals in value add are only GPs. So I'm usually having a deal, 1 or 2 or 3 or 4 partners, depending how heavy is the deal. Because as you know, in value add especially, need to have 4 strong captains in the deal. That it's obviously opportunity who brings the deal. Another
Hmm.
one is someone who's going to be the GC or who's going to run the construction. Another
Yeah.
one who's going to do the capital and debt, and then another one who's going to do the property management and leasing. Right. So a lot of times it's just too many hats to wear.
Yeah.
And if my experience, if you're third party, you may not get a quality as you wish. So you end up sharing equity, but you're just sharing with the GP, right? Who is riding the bus with you.
Surely, surely. No, that makes total sense. Actually, what you just mentioned is with the heavy lifts, the value increases so high because of the increase in NOI after
Correct.
renovation. So the hard money loans or mezzanine debt really makes sense. With no prepayment penalties, you could refi, and get the equity out and so forth. So that way, which is much cheaper money if you look at it in long term as
Correct.
compared to the investors' money, which is tied on for few years actually, and they're looking for 3 to 4 year hold, and then they want back 18 to 22 per eight. I don't know that much. So no, I see your point. Excellent. How about storage space? How did you get into that? Are you doing self storages or how?
Yeah. So self storage was the it's probably was in a sense similar asset class to the warehouses, because the first building, when I transitioned from residential to
Mhm.
commercial, that was the first deal in University Park. You helped me to do the loan. It was 76,000 square feet building, which we bought for 950 in appraised, and within a year about 2 million. Right now it's about 3.5 million. This building after 4 years, and we put probably maybe 500,000 into it. But anyway, so self storage was similar to warehouses, I would say, right? And um, just dealing with the warehouses and leasing them up. And when we lease the warehouses, we a lot of times do not lease them to national tenants, and the model is that we would lease to a smaller tenants, smaller
Mhm.
local tenants, because demand is still there. With national, I mean, industrial has a lot of demand right now, but it's still, you're sitting on a for a long time or longer time if you're trying to lease it to a national tenant who takes 50,000, 100,000 square feet box. But if you're leasing, 3, 5, 10,000 square feet box to a local tenant, so demand is fairly large. And same thing with a once you go to mini storage route, once you're leasing 100 square feet space, it leases even faster than an apartment. So to answer the question, how did I get in? It seems like self storages became a new, you know, a new, most of the desired, one of the most desired asset classes recently, since there is so much institutional money coming in, and it is fairly easy to underwrite. Same like you underwrite apartments, right? If self storage will typically trade very similarly in terms of cap, whether that's going to be in Tennessee or that's going to be in Illinois. Um, so, and usually, expense ratio, we kind of rule of thumb underwrite it at 35% expense ratio. So it's fairly easy to underwrite, and it's easy to go out of your market. When compared to like industrial properties, you really have to know the market, and it could lease at $3 a foot, or it could lease at $6 a foot, and there's not a lot of data to validate it. So with the self storage, it's very easy to do uh,
Mhm.
competitive analysis. How much the competition is renting. If they occupied or vacant. And another thing, a lot of self storages still are owned by mom and pops, and a lot of them never traded. A lot of them, they're not on CoStar or Reanimi, and they're just not available. So me coming from a residential world, I've done most of my deals direct to seller. We work with brokers, obviously. It just probably we buy maybe only 10% from the brokers that they bring, and we still go direct to seller. And it kind of it was very great, very good fit for me, because I was able to use the knowledge and the skills I built in the past, where we'd build our own list. We'll look at the properties that never traded. They're not on no one's radar, and we just go attack them. Those those owners who were just pretty much off the radar of the market, and we try to buy them directly.
So really, once you take over ownership, you can digitize these storage facilities, right? You can have a gate on front. You can have everything. You don't really need that much on-site, or maybe you have one on-site manager. So as far as the difference between multifamily and storage, it seems like self-storage is, once you have the system set up, it's pretty easy to manage, and you're not dealing with the same kind of tenant issues you would in multifamily. So it's an attractive model. And I like the fact that it seems like there's so many mom and pop owned self-storage facilities. And so really, when you're doing your data collection, what's the occupancy level? Is there any other storages in the area? What are their occupancy levels? What's the difference in conditions of our, potential self-storage and the other self-storages? And then you can kind of figure out where you can raise the value and hence increase the value. And that's what Saul seems to be doing very well. And then the opportunity to find them off market using the same skills you were using in the residential business, going direct to the seller. And so what kind of storage unit size count do you find? Because obviously, if you get too big, you're going to be competing with the big institutional players in self storage. So
Yeah.
there's a little niche of how many units, the average unit size that you actually look for now today.
Yeah, so I think what we're trying to go that our very sweet spot would be the facility that could generate after stabilization about $20,000 in gross a month. That's our sweet spot. I think looking back, what we've bought in the last 12 months, we bought facilities between 20 and 40,000 square feet. Once you go to 40, 50,000 square feet, you're definitely competing with the institutional levels who are having much lower cost of capital. So it's definitely challenging to compete. And again, self storage, we're trying to keep them. We're trying to increase the value, refinance, and keep them long term. So we target, I would say, 20 to 40,000 square feet. Well, if it's below 20,000 square feet, we a lot of times we just sell them. We have right now one in Tennessee we just closed, and we'll clean it up a little bit, and it's just too small to manage for us, and we'll sell it. But yeah, 20 to 40,000 square feet. Again, depending on unit mix, but I would say that will be between 150 and 400 units. In terms of management, yeah, we're our model is that once we buy, typically they have property managers. But what we do, we put cameras, we paint, we put automatic gates, and we of course install the system in the facility, which allows automatic collections, credit card payments, that type of stuff, and it locks the gate out if they late and if they're not paying. And we manage them. We manage them from here, and also we use VAs. We use VAs for collections. We definitely have property manager. We call them asset manager in house here in Chicago, and yeah, that's and the name of the game is just increase the occupancy and raise rents. It's very similar. It's the same game like in apartments.
Yeah.
Have you done any projects where you've actually added storage units? So Vinny, when I heard Vinny talk, he says because he's doing a lot of construction for assisted living right now, and he wants to develop ground up. I'm just curious if you added units, or most of them are just fixing up what you have when you acquire the property.
Yeah, so I'm building right now one in Will County. It's a 40,000 square feet. It's ground up. I would say cost. No, we're managing it in house. So meaning we're doing GC and development in house. So I think we're going to be at about $55 a foot on our build. But in that market, you're probably going to, so $55 a foot we're going to build. And in that market, probably gross will be about $11 to $12 gross. So give it or take, that's called $8 net. $8 net. So if we're building at 55 and land is going to be close to maybe like 15. So we're at about $70 all in, and we're going to be renting at $8 net once we said and done. And that's not including cost of capital. So anyway, on the basis will be over like 11 cap on that construction.
Wow. Wow.
Yeah, that's pretty good. That's pretty good.
Yeah.
It's an interesting model, and these things go up really quick, right? Like you can build these things because they're already prefabbed, or I mean, what's the process look like?
Yeah. Normally it's it's approvals, engineering approvals with the city. It depends on the city. 3 to 6 months, and once that's done, it's like probably 3 months to get everything done, because you need only foundation. There is no plumbing.
Right.
There's no plumbing. You need drainage. You need detention pond, and you're just building garages. You're building garages on the slabs. That's what you're doing.
Yeah.
And so I would say it's development still about a year, all the permits, approvals, and stuff like that. But once it's done, like within 3 months, we can have the buildings, and within 3 months, we can lease up.
Vinny, where would you want to build your facilities? Is it
that's a good point. Actually, I'm very strong in Florida right now, Saul. We are building at 8 locations. This assisted senior living A++ luxury, like 4 to 7 acres of land with 4 courtyards or 6 courtyards, things like that. But that's where we are looking at. I think storage units are, everywhere, right? Everybody, 2 out of 10 households, I heard, they need storage unit. Is that right?
Yeah.
the 3 mile radius and something. So we are looking land over there, and then also over here in California. I live near San Francisco, so my friend Anshu, he and I are looking at some cheap land, where it'll be easier to build, and also where there could be good demand for it. So
Yeah.
And
I just want to add, of course, I think very big piece of the puzzle is that villages really, they're not, or municipalities not so receptive to add more self storages. So
Mhm.
yeah, there's a lot of cheap land, but very few will be fit to do that development.
I see. I see. Okay. Yeah.
and probably too, just like when we're doing a loan or you're building a assisted living facility, um, the lenders sometimes for a ground up probably want a feasibility study to show where are the other locations are at, like on assisted living facility loans. Oftentimes they want a feasibility study about like what the market competition, right? Like, is it oversaturated, what projects are in line to be built and so forth, because that's obviously, if you're looking to develop, you really got to know what's going on. I mean, what are kind of some, is like CoStar like a tool you use often to see what the market competition, where, what advice would you
Uh,
have to look at analytics and
yeah,
data?
well, there is a company called Radius reports you're getting from it. Obviously, we're looking on
Mhm.
CoStar what's trading and how much they're trading per square foot, but CoStar will not give you indication how much, what's the competition. So
Great.
really, the study when we do that, it's really pretty rudimentary. We look at 3, 5, and 10 mile radius. And we
Mhm.
do secret shopping, right? So you look at how many facilities are in the area. You
Mhm.
go in and you call, hey, you want to lease the unit, and what's the price? How many you have? I'm gonna move in. You just do secret shopping this way, and
Mhm.
you collect the data within that area, and then I don't know the specific numbers, but no, my partner knows exactly how much is the range you should have, how many square feet of self storage facilities you have to have within 3 mile radius, and if
Mhm.
that ratio is there, we can put more self storage facilities. There's a rule of thumb numbers. I just don't know the number from the top of the head. No. But yeah, the company we use, it's called Radius, or Radius Reports.
Mhm.
Gives a lot of data for self storages.
How about lending, like construction loan? Is it easier? Bo, have you done financing on storage units?
Yeah, so a lot, it seems like Saul does a lot of value add, so he's usually taking these down with bridge debt, debt for self storage, and then the SBA 504 and 7A loan program, because
Mhm.
um, what the cool thing is like, people call me sometimes, can I get an SBA on a multifamily? No, you can't. But even though self storage is kind of an investment, they consider it owner user. And even if you're a newbie, you can get SBA financing if you have an approved third party manager and they
Uh-huh.
approve the agreement. So it's one of the easiest things to fund with SBA. Now, SBA, obviously, if you got a lot of moving parts on your tax returns, and a lot of us investors like to do cost segregations and write off everything, and SBA is going to scrutinize a lot more, and like any bank, but sometimes SBA might not be the best fit because of that reason. But if you can get 90% leverage with total cost with SBA 504, and you got a second, it's a first and second loan. The second loan's at 3.07% fixed for 25 years. The first loan, the senior debt's usually like a 5-year fix amortized over 30 years. So the pricing on a 504 is superior than a 7A. 7A is more aggressive, but yeah, that's a tool. There's tons of bank and credit union debt for these type of assets. The construction financing is a lot easier than assisted living facilities, for sure.
Yeah. So if I would chime in, I would like to, and I will do an SBA loan hopefully this year. But for so far, we financed everything with the local bank. So,
Oh,
and you go in the market, and typically local bank, yeah, they're very receptive to finance self storages right now.
wow.
They've been, yeah, it's fairly stable asset. They deem it as a very stable asset actually compared to the asset class, because I think 2008, that asset class did pretty well.
Yeah. I think next to multifamily, it's probably the next asset class that's like pretty darn desirable, that and some triple net lease properties. But yeah, I think it's a lot easier to finance than assisted,
Yeah,
10 times easier.
Yeah, leverage, I would say 75% that normal that we see, about 75% from local banks, right? I haven't done SBA. I would like to do SBA, obviously, but local banks, 75% usually.
And of course, that's usually always recourse, unlike a Fannie or
True.
Freddie multifamily loan. But yeah, I like this model. I mean, I would love to do one eventually, amongst many other acquisitions. And then on your industrial business, what I think you guys are really good at, part of your team is good at like fixing problems, right? So when you're going into this like 35% occupied industrial property with huge value add, like nobody knows what the heck to do with the property, right? So it's really having a specialty to figure out who's going to be the tenant, what kind of renovations, and then finding the tenant. And that's where you can make substantial money, because it's a niche. You guys carved out a niche because you have that expertise in that field, where self-storage isn't as complicated probably.
True.
And there's more players in self-storage than there is in like kind of the specialty industrial that you guys do. And so do you ever change like the use of the property? Is it usually just keep it as industrial? Or are you doing like adaptive reuse projects?
I mean, it's probably semi-adaptive reuse, but I think, the most common model would be it's a big box, 100,000 square feet, and we cut it up this box in 5, 10, 3,000 square feet boxes. We would pop the drive-in doors all around. If there's too many docks, we would just level the docks. And the avatar of the tenant is just a local contractor, local, lawn care guy, local electrician, someone who is doing e-commerce business and needs some storage. It's a small business typically, right? I would say in revenue, right around $1 million, right, a year, maybe even less. There is a big demand for automotive. So let's say once you cut up 3 to 2,000 square feet, there's a big demand of automotive. A lot of times municipalities don't like those tenants, especially. So then you need a special use most of the time. So normally you go after tenants who are, as we mentioned, contractors, e-commerce type of stuff. If there is not enough demand, then we go for automotive use. But then it requires working more with the city and stuff like that. But if the property is vacant, city will work with you, right? And we just rehabbing accordingly. And again, rehabbing is just cutting it up, drive-in doors, LED lights, catch basins, oil separator, drainage, which when we're talking 100,000 square feet property, that comes into $1 million of renovation. But I agree. This is more difficult niche because the pricing is very ambiguous in that niche. Meaning it's really you have to understand the market and do the testing and really talk to tenants how much they will pay for the rent, because it could be between $4 and $6 a foot, which is a huge swing in the valley. When self-storage is not going to be between $100 and $180 a 10 by 10, it's going to be between $120 and $140. It's very clear, right? It's very narrow, so it's very, very short window to miss on the value. One industrial you can miss if you don't know what you're doing, and the lending is much more. So typically our lending is only with the banks who know. Let's say we went to Milwaukee. Banks did not finance us, so we had to go in Milwaukee with the Chicago bank. Who knew what we're doing? Who knew that we know what we're doing.
Very good. So as we're coming up to our 30-minute mark, you've dropped a lot of nuggets.
Yes.
What's your take? With all this craziness in the real estate market, especially in the residential space and the multifamily, and what's kind of your outlook? How are you positioning yourself for are you going to keep doing what you're doing? Has your business model changed at all?
Yeah. So we stress test our model. Let's say if 2009-10 would hit, and what would happen, right? So we definitely can sustain if those vacancies will come back. we'll be able to sustain. Looking back, who we're leasing to a smaller tenants, and typically they were, and I consider myself more like a Walmart of warehouses.
Mhm.
If the tanks, we will still have those smaller tenants with the vacancies. We can sustain that. Now, what's my outlook? I'm still bullish this year. I'm trying to see very clearly exactly what's going to happen, but I think we still have 3, 4, 5 years of powder to go. There's so much liquidity in the market. If there is no black swan event the way I see it, we probably have enough liquidity for a couple of years at least to go until it's going to get exhausted. Even if they're going to start tapering and raising rates, probably it will happen.
Mhm.
Um, but I'm bullish. We're in target to buy 10 facilities. So we're in target to double what we've done last year. I mean, we have an ambitious goal to double our acquisitions compared to last year.
Mhm.
Very good. That's awesome. And so what are you doing when you're not? Are you still doing a lot of? I know you got into running marathons or half marathons. Are you still running?
Yeah, yeah, I'm doing those. Yeah, I'm doing Ironmans. Yeah, my next half an Ironman in June 4th in Hawaii.
Oh,
Last one I did in Florida, and before that I did New Zealand full Ironman in 2020 during the COVID. Yeah, so I'm doing that once a year.
Yeah,
oh,
because when I first met you, you were a little bit thicker. You lost
Yeah.
a ton of weight. I remember that. And
Oh
then
yeah, yeah, yeah,
the,
yeah, for sure.
the
Yeah, thicker is an understatement, but definitely did that.
yeah, that's awesome. I love it. So
so
Vinny, I think
thank
you
you
should.
so much. Thank
Yeah.
you for adding so much value. I really appreciate that you're taking the time to come on our show. Sal, and
Appreciate that.
all the best luck to you. I think market. You're right. I know market. Stock market is adjusting to the inflation and also the increase in interest rate, which is going to be forthcoming probably in March. But again, I always feel the deals are there, right?
Yeah,
They might be a little bit margin here or there, but that should not hurt. Those who want to make it happen. You know.
that's true. That's true.
Sure.
Thank you,
Uh,
Thank
guys.
you so much. Yeah. Huh?
uh,
Should we
uh,
wrap up? What do you
yeah.
think?
Let's
Words?
send
Go?
everybody else. Don't
Yeah.
forget, guys, to and Saul will send you a edited version of this so you have it.
Yeah. Please.
So you have it
Yes.
for you.
Yes.
Really appreciate you coming out. We love to talk to people all over the nation, and learn about their investing models. I think it helps our viewers and listeners because we're always interested in who's doing what, how they're doing it, and thought you broke it down really well today. So I got a better grasp of the other side of the self storage and industrial space, and continue doing big things. It's awesome seeing so many people succeeding in real estate, and happy for you. And thank you for spending time with us. And you can
Yes.
take us out, Vinny.
Totally. And we come live to you every Friday at 9:30 Pacific and 12:30 Eastern. Please join us again. I know I didn't ask there were quite a few. We go live actually in Facebook, LinkedIn, YouTube at the same time in many of the groups also. So we'll see you next week. Thank you so much for joining. Thank you, Sal. Appreciate you. Bye
Thank you,
bye.
guys. Thank you.
Bye
Thank you.
Thank
bye.
Thank you.
you. Thanks. Bye
Bye
bye.
bye.